This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here today on our program. I'm Cesar Delgado on today for XRM 1010 in Fort Morgan, Colorado, and in North Dakota on KSJBAM, WITY in Danville, Illinois, nearby Champaign area. Go Illinois, by the way, in which they won in Nashville at the Liberty Bowl against the University of Tennessee for last Tuesday. It was a great game on last Tuesday night. Finally, in Albany, Minnesota on some. Happy New Year to Joe Gill, A.K. Gilly. Joe is pretty good farm director for them in Albany, Minnesota. Otherwise, this is the agricultural news about the Farm Bridge Payment Program for the payment for their farms by the trade barriers with both counties in the United States and China. From December 17th, farmers did reported to the Department of Agriculture about their yield trends and the acreage in 2025 to the Department of Agriculture. We were talking about it with Tyler Schua from agmarkets.net on the acreage data. We have Tyler on today. Finally. Cattle on feeds report on December was lower than previously estimated from the Department of Agriculture. The estimate is lower at 173 million per head. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the We were going to talk with Tyler Schua today about the commodities markets for this new year in 2026. Tyler is a commodity broker in North Dakota. Hey, Tyler, how are you? And a happy new year.
I'm doing good. Things pretty good up here. Happy New Year to you too, Caesar.
Great to have you on today for our program. Okay. Let's start with our conversation about the big report on January 12th for the World Supply and Demand Report. What is your takes on it?
Well, the January report's always kind of a big report. It's a big data dump from the USDA. We get the winter wheat seedings report. We get a quarterly stocks report, which is going to tell us how much grain we used in the first quarter of the marketing year. So that would basically be from September 1 through the end of, let's see here, through the end of November. So we're going to get that report, kind of figure out what we had stocks on hand as of December 1st. We're also going to get the WASDE report, which is always the big one, and the January one is a big deal because that kind of closes out the what is now the old crop. So this will be the last adjustment we'll see on production numbers. So moving forward, every WASDE we get from here on out, the yield and the acreage will kind of just stay static wherever they print it for this month. And they're going to start pulling in more of the farmer information. They're going to look at some other data, but it'll kind of set the stage for what we see over the next 8 to 9 months as we move into September and close out the marketing year next year. So that's why it's an important one. It's been known to throw some wrinkles. There's a lot of people looking at maybe some changes coming at us. And I think maybe your next question will kind of allude to that.
What is your thoughts with the corn yield on the report, Tyler, from September report due on the government shutdown?
So, the yield is still pretty high for a lot of farmers' likings, and I think it's somewhere in the 186 range on the December WASDE report, and 53 bushels on soybeans. There's a lot of people thinking we're going to see the yield come down. Some of the data that we get kind of indicates maybe that's the case. I don't know that we're going to see the magnitude we saw last year. Remember, last year we were a 180 or 183, I think, coming into the before the January report, and we ended up 179. So we saw a reduction in yield. Um, Almost a 4 bushel per acre yield reduction on the January report in 2025, which was a big move. It was one of the bigger moves we've seen. There's a lot of people thinking we're going to see the same type of move. I don't know that it'll be quite that big. Our estimate right now, kind of what we're working with, is maybe a 2.5 bushel decrease on yield, which is meaningful. That would take some supply out of the marketplace. Would have to readjust some balance sheets. The big question, I think that's the first number a lot of people are going to jump to, is what's the yield do? The second number they're going to look to is what does the USDA do with feed and residual? That number, according to a lot of analysts, is bloated, meaning that USDA is using a lot of bushels in feed rations and then lost bushels, which is not that uncommon when you have big supply. So big yields, big acres, you have more and more bushels that are lost just due to spoilage, so on and so forth. But we're struggling truing up some of the feed numbers with the lower numbers of cattle, the lack of cattle coming in from Mexico, and being placed on feed in the United States. Now, granted, some of that's offset by exports to Mexico, but that's a whole other story. Some of the poultry inventories are lower than what we've expected. So there's a lot of give and take, and I don't know that there's a great way to measure all that. I mean, even the USDA will come out and say, hey, they don't have a formula that they use for calculating feed demand based on the number of livestock that are out there. Their formula for calculating feed and residual is solely on the back of what is supply. It's a formula used to determine how much will get consumed. So I think those are going to be the key numbers, because there's a case where they lower yield, but then they decrease the feed and residual number by an even greater number than what the total production has dropped. And net, you actually increase your carryout. Now, I'm not calling for that. That's not what I'm saying is going to happen, but that is a possibility. Um, all in, I wouldn't be surprised if we don't see that carry out dwindle just a little bit on this report. On soybeans, I think you could make the same case. You could see the bean yield drop just a little. There, you don't have the play in the feed and residual number that you do in corn. So I think you jump right to carry out. And expected carry out right now is 290 million bushels. You pull the yield down a little bit, and that's a tight carry out for soybeans domestically. So it'll be interesting to see what they do. Now, on the flip side of that, we've got some pretty poor exports going on, and some of that's been accounted for in the WASDE reports, but I wouldn't be surprised if we don't see that export number drop just a little bit on this report.
How is the corn markets for today? Really quick, Tyler, on the March corn.
March corn closed down 3/4 of a cent. It actually traded higher most of the day, and kind of late in the day, kind of gave way to some selling pressure. Really, all the corn and bean markets were both up for a very large portion of the day, and within about the last hour and a half, they kind of gave it up, and corn ended up down anywhere from 3/4 of a penny to a couple cents, and your beans ended up down about a nickel to 7 cents.
Sure. Do you have some thoughts about data based from December 17th about the yields estimates from farmers?
From farmers' perspective, it'll be interesting. what I can tell you is in some of the major producing states, Iowa, Illinois, Minnesota, well, Iowa and Illinois, a lot of farmers are telling us their yields were not what they were the year before. So, and according to USDA data, that's not been the case up to this point. So I wouldn't be surprised we don't see some of those yield numbers drop from those states. But then you got states like North Dakota, Minnesota, South Dakota, Nebraska, where yields were really good. And I wouldn't be surprised if those yield numbers don't increase in some cases. So it'd be interesting to see how, there's a lot of data that goes into there. There's a big database. And it'll be interesting to see what happens. What I can tell you is last year when we saw that big drop, what the USDA told us was, hey, we were working off of farmer data, and it wasn't until the January report where the farmer data came in and said, hey, our yields weren't nearly as good as we thought they were going to be. So, that's a hard one to peg. I've long been someone that says, I don't know how we think we can estimate the national yield. I work with producers scattered all over the country, and they struggle telling me what their yields were even just or are going to be even just a week or two before harvest. So, until combines roll, it's really hard to predict. And the nice thing about the January report is most of the combines are put away, and we've got a better idea what those yields actually were.
Can you tell us about the deadline back on December 17th from the Department of Agriculture? Do they put
Um,
it on the big report on Monday?
I don't guess. I mean, the deadline to report, is that what you're asking?
How is the harvest progress in Brazil for their beans?
It's pretty slow. I don't think they've really ramped up much. There's some areas that you get further, excuse me, in the north where there's some harvest going on, but it's just very, very early. What I can tell you is there just doesn't seem to be a lot of issues with that crop right now, and I think that's why we've seen the drop in the soybean board over the last 6 weeks. There was quite a bit of optimism built up and possible problems developing in South America. On top of that, you had kind of this possible buying, Chinese buying spree that I wouldn't say didn't happen. We've they've been coming in buying beans here and there, and but in the meantime, all the government data was delayed. We weren't getting accurate commitment of traders reports, and as a result, we rallied maybe further than we should. Now we've sold off in response to the good weather in Brazil, and so are they harvesting yet? No. Well, I shouldn't say no. There's some early harvesting going on. Not enough to really make any type of comment on it, but I would say overall, sounds like the crop is in decent shape.
Do you have any update for their second corn crop in Brazil for right now?
Not really. Kind of the same story there, though. It feels like a replay of last year where we came in and we're like, wow, we got a really big corn crop. So remember, the second crop won't actually go into the ground till the beans come off. So their first crop corn is in the ground now. Their soybeans are in the ground. They'll pull soybeans off, and in some areas they'll stick in the safrinha corn crop. But right now, they didn't have much of a delay. There was some concern earlier this year there would be a delay in the planting of soybeans. I don't think it was enough to really swing the pendulum too far. I would expect them to put a pretty big crop, second crop of safrinha corn in. And right now, I think you just got to go with, hey, the weather's good. First crop corn is going to be good, and there's very likely that they're gonna pile some in the ground. So I don't see that as a hey, we need to be watching this and as a friendly to corn prices moving forward, all on its own.
Finally, we talked with you on past year about the livestock markets. We talked with you on past year about the livestock markets with new record high for the feeder cattle. What do you have any concerns about these prices in the feeder cattle for 2026?
I wouldn't say I've got any concerns. I think the general theme exists. We talked all along there, late summer and in the early fall, like, hey, if you own cattle, it's a really good idea to look at some type of price protection strategy. We got blasted. We sold off almost $70, and it was the end of the world. And now all of a sudden we're right back, kind of getting close to those highs again. Don't blink. January feeders are at 362 is where they settled today. The high was 380, so we're within $18 of those highs. It's something that I think we could go back to those highs, but I don't. I think producers have to be hedge minded here. What we saw this, around Thanksgiving time, well, into Thanksgiving, late October into Thanksgiving was words matter. And when the administration says, hey, we want to bring the price of beef down, the market gets nervous. And I think a lot of the things that have been bullish cattle so far are less bullish today. So, the border's not going to get more closed. The herd is probably not contracting anymore. I'm not going to say we're expanding it all that much, but I would argue that we're getting near the end or to the point of the peak restriction on cattle, or the shouldn't say the peak, the valley on cattle inventory. So I'm not at all calling for a top or that this market's going to fall apart. In fact, I wouldn't be surprised if we don't challenge some of those highs. But I think if you're a owner of cattle and a hedger or producer, you need to be concerned about what prices could do going forward.
What is your main thing is in the cattle markets for this new year?
For the new year, the main thing is just paying attention. I think it's headline risk. That's what broke this market there, October into November, was headlines, and I don't think that changes. And the hard thing about headlines is they're really hard to predict.
Of course. Finally, do you have some recommendations on the corn markets for this new year?
I mean, recommendations. I think if we get new crop corn, December corn up in that 470 range, producers got to be thinking of ways to lay off some risk and hedge some new crop corn. If you're sitting on old crop corn, we've been buying some puts down, down below the market here recently, just in case. I mean, we're hoping that this report on Monday is friendly, and we get a nice bounce. We're able to make some sales into that rally. But we definitely want to make sure we've got our downside protected, because there's a chance it could come in negative. And if it does come in negative, we're staring at big production and big carryouts, and it's really hard to get super bullish when you're looking at some of those numbers we're looking at. The thing that I keep in the back of my brain is demand is really strong, which is a good thing. And that tells us, hey, if there is a global shock, if there's some type of supply issue somewhere, the market will respond accordingly and give us opportunities to make some sales, but the producers got to be ready to do it.
Thanks, Tyler. We will see you on next Tuesday.
Sounds good. Take care, Caesar.
This is Tyler Schua from agmarkets.net. Do you like to have more information? You go to agmarkets.net. I am Cesar Delgado. This is Backroads of Illinois server to farmers and ranchers in central Illinois and the Midwest.